Welcome to Cypher Sleeping Forest. Thank you for joining me today. My name is Fernando, and this is the first video on the channel. I plan to produce a lot of content in the future, but for now, I'll only be uploading about once a week. Depending on demand or how popular it is, I might do more. I'll be sharing my strategies, thoughts, and ideas to get ahead of the norm, as well as try and just give you a different perspective on what's going on right now. And anything on this channel is not financial advice. I am not a financial advisor, but the insight that I think you can get from a community of people is much more valuable than a single person. But I can at least direct you in seeing things that you haven't seen before, think of things that you haven't thought of before. So let's talk about a couple things that have been going on in the past. We've had well, past but pretty recent, it's still going on right now. We've had the pandemic from 2020 that's kind of carrying over across. We've had I can't say that word, I guess, I'm not sure, but we've had a ton of stimulus being added to our system, which that incurs a lot of things moving around. And I want to break that down into like different markets, but I don't want to cover too much in this video. So I just want to give you a quick background of what's been going on, potential things that may be coming in the next couple of months, and hopefully that helps you better position yourself, at least so you don't get hurt or so you can be profitable. But the main goal is to increase your quality of life, for sure, 100%. I think a lot of people don't have the opportunities because of their financial well-being, or just because of the environment that's around them. And a lot of this stuff isn't taught in school, so it is extremely valuable. So if someone gives you something of value, at least for me, I try and take it, understand it, and I appreciate it. So if any of this information is valuable, or you find valuable to you, I hope that you're able to like, share, and subscribe. If you have any questions, go ahead and leave me comments, and I'll try and answer them the best I can. So let's get started. So we've had a couple of stimulus checks over the last couple of months. We've had market swings. We had the stock market crash. We've had it rebound back. I think it's been the fastest crash in history, fastest rebound back, which is very not normal. And we've had a lot of what I believe inflated prices in the stock market. So we have a lot of markets that I plan to cover. Stocks, we have real estate, housing, and then we have crypto markets as well, and as well currency markets, so the dollar. The reason why I want to start off with the stimulus and all this money that they want to add to try and quote unquote help people is to give you a different perspective of what may come after, if you're not thinking of this yet. So the White House considers splitting $3 trillion recovery plan into two bills. We just received 1.9 trillion this year, and then we received I believe it was around 3 trillion last year. And you may not think that or you may not even have thought that would affect us, because you haven't seen a drastic change. But let me show you some numbers. So this is the U.S. inflation rate from 1929 to 2023. All the information that I share is public information. You can go ahead and find it yourself. So these are pretty much cycles. We work on a system that has these boom and bust cycles in economy, and a lot of people aren't aware of this. So I'm going to try and break this down the best I can so people can understand the system that they live in, they interact with. And like I said, it's not normally taught in school, so you're about to get a free course. So let's go through a couple of history on inflation, which is very important. As you can tell, early in our markets, we had low inflation to no inflation. We even had deflation at some point in time. However, as time progresses, we've actually had more inflation. 2.9%. This is year over year. 1.8%, 1.7. You're like, oh, the numbers aren't that bad. But if you add them up over the years, it actually ends up to devaluing your dollar greatly. That's why the same things that you buy now compared to what you bought them before are extremely different. And older people, I'm not that old, so older people who have lived through all this complain because the prices of a bar of soap, same bar of soap now, same material, same size, everything, costs more now than it did before. And it's not because the bar of soap is more expensive, it's because the value of the dollar has become less. So the less your money is worth, the more you have to use to purchase the same material or same product. And every time we have inflation year over year, it drops the value of your dollar. So as you can see, wow, this is huge. 1979, 1980, we had huge amounts of inflation. We've had recessions, we've had military spending, we've had a lot of issues in the past. Why it's so crazy, and I'm not sure if you guys have heard about this, but it's being talked about right now, is because the percentage it's increased. I'm sorry, the assets that have been added, which generally cause percentage increase in our financial system, has drastically gone up. And a lot of people believe that we may have large inflation. But another thing I want to bring up is let's say average inflation is about 1.5%, which is what the Federal Reserve, I believe, said it was year over year. Check your bank account. How much does your savings account produce in interest every year? Because if it's not a minimum of the, I believe, 1.5%, then you are losing value in your money, which means it's gonna cost you an extra 1.5% of what you currently have next year to have the same value of money, the same purchasing power, because your money drops. So in the bank, if you're not getting at least that 1.5 or 2%, you are losing value in your money. This is why I don't really like savings accounts, because you have them, the money doesn't move, it doesn't work for you. Generally, I say it's better that you invest. And I had to learn all this stuff on my own research, trial and error, and I want to share it with people so maybe people don't have a buffer like I did, and they can get better at moving their finances around. So right now their forecast is 1.4 for last year, which I believe was 1.5, and the current rate for 2021 is 1.8, 1.9, and 2%. Last I checked, the Federal Reserve wanted to keep inflation at about 2%. However, let me show you some numbers. Charts are your friend. If you don't know how to read or interpret data, I suggest you look into it. It is important to learn and know how to read literature, but it is equally, if not more important, to learn how to read data and numbers. So these are the last couple of years that we have on data as far as inflation, and this is year over year. So as you can tell, we've had a lot of inflation, and you can see the spikes go up, and then these negative ones are deflation. So as we move up, we generally tend to go back down. We hit peaks and then we go back down, kind of like what we saw over here, which happens in markets all the time. It's perfectly normal. Now, knowing this, if you had to make a bet, when was this? 1979. So we went up in 1979, 1980 in inflation, and now we're going down, 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 down. So now that we're down, which way do you think the inflation is going to go? Do you think it's going to go down to deflation, where our money is going to be worth more, or do you believe it's going to be worth less? Because like I said, there's ups and downs, ups and downs. So I personally don't believe it's going to go into a deflationary state. Why? Here's why. So this is from the Federal Reserve. As you can see, the Federal Reserve has bought a lot of assets from the U.S. economy because we've taken money to pay for these stimulus packages. The interesting thing I want you to see is you see this line where the growth is mediocre, right? But during the financial crisis back in 2008, we had a crash and it was nasty. It was nasty. And it looks like we may not have fully recovered. What they did is they injected money into our system to try and save our economy and prop it up. So from, let's say, September 2008 to August 2019, it jumped from these are the assets that the Federal Reserve purchased in order for us to acquire money so we can, prop up the economy. So we were at about 1 trillion. This is in US million dollars, so this would be a trillion. 2008 we were at 1 trillion. And 2019, which is 11 years later, we're at about, let's say, 4 trillion, just to round it up. 1 trillion to 4 trillion, that's about a $3 trillion difference. Now the crazy part is, from 2020, we were at 4 trillion. And I believe this was within the first 6 months, we jumped up to 7 trillion. So initially, after the housing crash, it went from 1 trillion to, let's say, about 4 trillion. And that was in a span of 11, 12 years. And in a couple of months, it went up the same amount. That shit is scary. People don't understand how much money was just injected into our system. They call it quantitative easing. But pretty much what is the possibility of it reducing our purchasing power, devaluing the dollar is pretty high. And they want to do another 3 trillion. So this is something very careful. This is something that you should be very careful of and look at. I know a lot of people don't understand what happens in our financial system, so I'll try and break it down the best I can. And if you have any questions, you can go ahead and ask me. But I suggest you always do your own research so you can get in the habit of knowing where the information is and where you can pull it up from. So as of March 24, 2021, the U.S. total assets held by the Federal Reserve Bank is 7.7 trillion, like we kind of saw, and we can kind of see it over the 10-year. Oh, I can't do this one. I guess I gotta sign up. But yeah, that's pretty much it for what's going on as far as the Federal Reserve. We want money. The Federal Reserve gives it to us, and then they take our bonds or our assets that we have to help keep the economy up. That is a lot of money. And what's scary is that the dollar hasn't been doing so great as well. So this is the DXY. What I'm currently using is TradingView. And if you check from 1986, where we were at our high, we can see the same cycle that we're talking about. This is how markets move. There's a bunch of cycles that moves from one market to the next. And it just cycles till there's like a bust in the system, but generally they try and keep the same cycle so nobody panics, and then try and tell you it's under control, because people tend to fear what they don't know. So if you fear managing your money, if you fear the government, if you fear cryptocurrency, if you fear like buying a home or starting a business, that fear is from lack of education. I would say a lot of the time it's from lack of education. So to overcome that, to be more comfortable, to try and get ahead, you should try and overcome those fears. Use your knowledge, use your head. Always try to grow. We have so much tech available right now. So much information is easily available right now and growing at a crazy rate that you should take advantage of it for sure. So I want to get back to the dollar. Um, these are high points. So back in 85, and then we had some over here at '03, and then was it 20? April 20 or 2020. So what does it look like? This is a channel. When you create a line above the high points and a line at all the low points, and there's a trading range, which is the area that the dollar's been trading at. It's touched the high points and it's tried to go higher, but with inflation, the U.S. economy not being in the greatest shape, I personally see that there's more risk for it to go lower. What does that mean? To me, that means that you should be protecting yourself from inflation. You should be protecting yourself from having dollars that are going to be worth less in time. One, with just the current trend overall from X amount of years, you can say for the last 40 years, the dollar overall has been in a downtrend compared to other commodities or asset classes. Commodities, gold, silver, oil. I'm not a big fan of oil personally, so I prefer clean energy. I'd say lithium ion would be a good source of a commodity. A home would be a good asset just because they appreciate over value and they protect yourself from inflation. So those are a couple things just to keep in mind, because as you can tell, your dollar value is going down over time. As you can tell, your dollar value is going over time. Just look at your savings account, what they pay you, and how fast it devalues year over year. So this is this is even the scarier part. Okay, this is our national debt and this is our GDP. You can say this is what's coming in and this is what's owed. And then we have our external GDP to debt ratio. You can go to usdebtclock.org and you just have all the information of the US, and there's different ones for the world. Right now, this is the US one. You can see student loan debt. You can see just household debt. You can see a bunch of different debt that we owe overall as an economy and as individuals, I guess. So let's go to the world one. The reason why this one is very important is because our debt to GDP ratio is 129%. Generally, you want a lower number. The higher it is, the riskier it is, because there's less chance of paying that debt. So overall, we're about, let's say if this was year over year, it'd be a $7 trillion that we'd be down in year over year. As a country, generally that's like, okay, it's possible we can turn it around. However, China's national debt is only 8 trillion, while their income is 7 trillion. Now this is crazy. And this is the ratio, 12.85%. So if you don't like China, you're gonna hate them when they're one of the, well, they've been a superpower for a while, but their economy is gonna be bigger than the US's, in my perspective. And it looks like it might not only be me, because I saw this video after speaking with one of my friends. And let's hear it and see what Elon Musk has to say about what he thinks with China and it being a powerful country right now.
What attracts me most about China's five-year plan is the tremendous commitment to a low-carbon economy and ultimately to a sustainable energy economy. In the five-year plan, China is committed to reach peak carbon emissions sooner than 2030 and to have a sustainable energy economy by 2060. These are very aggressive goals, and I think they're great goals. I wish more countries actually had these goals. I'm very confident about Tesla's future in China. The Chinese economy, I think, is going to do extremely well over the next decade and will become the biggest economy in the world. And it's also committed to a sustainable energy future, and Tesla is doing both of those things. So we're building cars. We have China, I think long term will be our biggest market, but both where we make the most number of vehicles and where we have the most number of customers. I would like to strike an optimistic note and say that I'm very confident that the future in China is going to be great, and that China is headed towards being the biggest economy in the world and a lot of prosperity in the future.
So just that part alone, China will be the biggest economy. I can see it happening. They have 1.4 trillion people approximately in population. Yet they're more profitable than we are from a business perspective. And I'm talking about the economy. Like, you can say like they can treat their people however they say they treat their people, but that doesn't change the fact that as an economy as a whole, they look much, much stronger than the US. So that's something to keep in mind. So keep in mind the US dollar isn't doing the greatest right now. Keep in mind the US is in debt and it looks like we want to add more to that. Keep in mind that the Federal Reserve owns more assets now than I believe they ever did on their balance sheet, and I just see it going up. Like, where's all this money coming from to pay for these stimuluses? Is it going to come from taxes? Is it going to come from future business deals? Like where's this money coming from? If you add it to the system, you print more money into the system, it's going to devalue the dollar like it's done in the past at a higher rate. So this is something to keep in mind of. Protect yourself, protect your family, try and protect your friends. I'm not going to say everyone's going to listen because I completely understand not everyone wants to know this information. But at least you gave people a chance, an opportunity to be aware of something they might not have been aware of. So for me personally, I have crypto. I don't want to talk about which coins I have, but if you do want to know about that, go ahead and leave me a comment, and maybe I'll do a video on that. Next video I want to talk about it would probably be crypto as in general, just because there's so much room for growth, and personally the stock market for me is not in the best shape personally, but to each his own. I wish everyone the best of luck. If you have any questions, like I said, go ahead and leave me a comment. Please like, subscribe, and I'll see you guys in the next video.